Hi, and welcome to a special market update. And we're going to be looking today at some Western candle signals, specifically the head and shoulders, and some aspects about the NDX and the euro dollar that you may find of interest. So let me segue first in going over what a head and shoulders is, because we'll be referring to that when I talk about the NDX, and many of you are familiar with it, but just in case. The head and shoulders is a classic Western indicator. And of course, for those who are familiar with candlesticks, you know this. For those who are new, you may not realize this. But candlesticks use the open, high, low, and close. And that's exactly what is used on the traditional or old-fashioned, now it's an old-fashioned bar chart. And with that in mind, because the candlestick line uses the same four data points, open, high, low, and close, as a bar chart, you could use all the Western indicators, your current favorite Western indicators, on a candlestick chart in addition to candlestick charting strategies. So, the head and shoulders, the market rallies, pulls back, rallies again. The second rally is higher than the first rally, and the market pulls back, and then rallies again. And the first rally and the third rally are lower than the middle rally. And this is referred to as the head and shoulders. Kind of looks like a person's head and shoulders, right? And when you break under the support line, which connected the low of the head, that's a bearish, a potentially bearish signal. It's called the head and shoulders top. Now, interestingly, the Japanese had this pattern way before we had it in the West. They called it a three Buddha pattern, and it looks like this. And some of us may call this McDonald's, right? It's just a coincidence I made this in yellow. It looks like the McDonald's arch. But anyway, it's a three Buddha pattern. And as I mentioned, the Japanese had this back in the late 18th century from my research. The earliest that the Americans had was the early 1900s, again, from my years of research into researching the candlesticks. And I'm also quite familiar with history of Western technical analysis. And here's an example of why they called it a three Buddha pattern. You can see in a Buddhist temple, there's a large central Buddha and two smaller Buddhas or saints to the left and right of the central Buddha. So same pattern on opposite sides of the globe. So let's get back to why I discussed the head and shoulders top for a couple of minutes. Now notice in the NDX, and we'll go through these arrows and so forth in a couple of minutes, we have a potential head and shoulders top, left shoulder, head, and right shoulder, potential right shoulder. Now keep in mind, one of my trading principles, we have about 15 what I call Nison trading principles, and one of them is my if-then scenario. If the market does such and such, then we react accordingly. So this is not a head and shoulders top. It's a head and shoulders top only if it breaks under the neckline. So if it breaks under this neckline, especially on the close, then I would take defensive actions. Now, notice something here interesting also, how I have this red arrow. This is called a rising window. And a rising window is when the market gaps higher. And you can see the little gap over there. And the gap, the bottom of the gap, becomes a support area based on the close. Now, although the market broke under it intra-session, both here and here, it did not close under the rising window, so that is still a valid support area. Likewise, notice this falling window here, it's a gap down. Notice this window, falling window became resistance the next session. Windows are one of my favorite strategies. I spend an hour, more than an hour, on our advanced resources to go over what windows are. But anyway, that's the essentials of windows. Rising window is potential support. The falling window is resistance. So between the rising window as support and the potential support line of the neckline, okay, I would look at the market to hold support as it has been doing anywhere between the recent lows around 27.80 down to about 27.60. If the market closes under 27.50, because remember this neckline gets lower and lower as time progresses, then that would be, to me, a short-term bearish indicator. Actually, I'd give it a little bit of leeway because, look, even if it breaks under this line here, notice what's next support we have here, and this little rising window over here. So to really do damage to this market, longer term damage on the NDX, I think we really have to close into 2750 because I wouldn't want to be short or exiting long positions on a break of this support here, only to have support over here and support at the rising window. So I'd say close under 2775. Now let's move on to the euro dollar. Here we have a series of green candles. Okay, so the bulls are in charge. On this one session, the whole market had changed. This is a doji, where the opening and closing are the same or nearly the same. Now, interestingly, there's a Japanese proverb, and it's the fall here in the Northeast, so I think this is appropriate. It says, with the fall of one leaf, we know autumn has come to the world. And what you could do with the candlesticks is using that like the falling of the one leaf to get an early indication of a change in seasons, so to speak, or a change in trend in the market. And that's the power of candlesticks once you learn how to use them correctly. And that's what we here at Nison Education do to make sure you use them correctly, because a lot of information out there, but unfortunately a lot of it is dangerously wrong, as we see and hear from people who have gotten their education elsewhere. But anyway, so the doji is telling us that market trend has gone from up to neutral, and the market that increased the likelihood of the market selling off, which it has indeed. And one of the indicators I like looking at is change of polarity. In other words, old resistance, and I've drawn these dotted blue lines as an old resistance zone becomes new support. So you could see how the support level is holding. So with that in mind, anywhere from around 128 down to maybe 127.40 or so should be a potential support area. We could see a bullish engulfing pattern here with the green candle wrapping around the red candle as a support area based on the close. So you could see how it got under it intersession but didn't close under it. So anywhere from the recent lows down to around 127.40 is where I look for support. And the doji often becomes a resistance area. So on any substantial rallies, I look for resistance up at that zone. And by the way, for those new to candlesticks, just a reminder, you can go to our website at candlecharts.com and you can click on the free candlestick charting glossary. You'll let your friends know about this also. It's no cost. And we give you basic definitions of the major candlestick signals. So if you want to know what a window is, or in this case a morning star, you'll click on the candlestick charting glossary, and you'll see all the major candlestick signals on that glossary for your education. So thanks for joining me, and look forward to continuing working with you at candlecharts.com. Have a great day.